Good afternoon, shareholders, ladies and gentlemen. 2025 was an exceptional year for EcoWorld. We achieved record high sales of 4.55 billion, exceeding our sales target by 30% and surpassing last year's record of 4.07 billion. Every region contributed to the strong performance achieved. EcoSouth led the way with 2.27 billion sales, representing 50% of total sales. It is also the second consecutive year that we have crossed the 2 billion mark in Iskandar, Malaysia alone. EcoCentral accounted for 39% of group sales, totaling to 1.75 billion. Sales achieved were backed by solid take-ups for our residential, industrial and commercial products. EcoNorth contributed 524 million or 11% of total sales, an impressive number from only 2 townships on the mainland of Penang. Collectively, the high level of sales from every region underscores the resilience of our diversified portfolio and the strength of our brand in the nation's 3 primary property hotspots. Growth in 2025 was driven by all 5 revenue pillars, each playing a meaningful role in the group's record performance. Eco Townships recorded 1.89 billion in sales, of which 81% came from properties priced above 650,000. This is a clear affirmation of sustained demand for our highly sought-after upgraded homes. EcoRise contributed 771 million, with 61% of sales coming from our Duduk apartments. This was complemented by higher value service apartments such as Swang House at BBCC and Serumah at EcoCentury, reflecting our ability to serve both the mass and aspirational segments of the high-rise market. EcoHubs delivered 664 million, representing 15% of group sales, as strata retail and office units within our integrated townships and business parks attracted strong demand from both business owners and investors. On the industrial front, Eco Business Parks achieved 263 million in sales, supported by continued interest in our semi-detached factories and industrial land. Meanwhile, Quantum contributed 960 million from sales of industrial land to 2 global hyperscale data center operators, further strengthening our strong positioning in the fast-growing high-tech and digital infrastructure space. Overall, our residential segment was the largest, accounting for 58% of group sales, with industrial making up 27% and commercial 15%. This well-balanced portfolio is a major factor contributing to the growth and resilience of sales over the years. 2025 was not only a record year in sales, but also a record year financially. Revenue grew by 30% to 2.93 billion, while gross profit increased 52% to 926 million. Gross profit margin expanded to 31.6%, up from 27% last year, driven by disciplined cost management and contributions from higher margin completed phases. Profit after tax rose 47% to 445 million, as our operational momentum was translated into meaningful bottom-line growth. Importantly, future revenue has at 31st October 2025 remains robust at 4.89 billion, providing strong earnings visibility and cash flow certainty in the near and mid-term. Most of our projects are now in highly cash-generative phases. Net cash generated from operations rose 18% to 1.32 billion, reflecting the quality and maturity of our developments. Net operating cash after interest and taxes was also very healthy at 932 million. To further strengthen our balance sheet, we successfully issued 800 million in perpetual sukuk, which was more than 4.5 times oversubscribed. We are thankful for this clear vote of confidence from the capital markets. We closed the year with a substantial cash balance of 2.31 billion. As at 31st October 2025, gross gearing stood at 0.65 times, while net gearing reduced to 0.28 times. In addition, over 1 billion remains receivable from large tract industrial land sales, providing strong near-term liquidity and financial flexibility to support continued growth. In line with our commitment to balance growth and shareholder returns, we declared a final dividend of 2 cents per share for the 4th quarter of 2025. This brings total dividend for financial year 2025 to 7 cents per share, our highest to date, reflecting the group's solid financial performance and confidence in the sustainability of our earnings. Going forward, we remain committed to delivering meaningful and consistent dividends, while continuing to invest prudently for long-term growth. At the end of 2025, We have approximately 5,300 acres of remaining land bank across Iskandar, Malaysia, Klang Valley, Negeri Sembilan, and Penang to underpin future growth. We expanded our land bank by more than 3,000 acres across key growth corridors, with each acquisition carefully selected to strengthen our long-term development pipeline while maintaining capital discipline. Our ability to move quickly from acquisition to launch helps accelerate value creation and optimize capital deployment. Our speed of execution continues to deliver good results in our latest project launches. Eco Botanic 3, launched in September 2025, builds on the success of Eco Botanic 1 and 2. Market response has been very encouraging, and we look forward to welcoming a new generation of young homeowners who will further enhance the vibrancy of our flagship developments in Iskandar Puteri. On the industrial front, Eco Business Park 7, our first project in Negeri Sembilan, which we are jointly developing with SD Guthrie Berhad and NS Corp, was launched in November 2025. Sales to date have exceeded expectations, supported by demand from local manufacturers for our SME-focused factories. We have also been receiving inquiries from regional players given the project's excellent location within the Malaysian Vision Valley corridor, very close to KLIA. Preparations are also progressing well for the launch of Eco Radiance, an 847-acre mixed township in Semenyih. Together with Eco Majestic and Eco Forest, we now have over 2,400 acres in this fast-growing corridor, enabling us to benefit from scale, brand continuity, and operational efficiency. Down south, we form a strategic partnership with SD Guthrie and Permodalan Darul Takzim to develop Eco Business Park 8, a 935-acre industrial park in Kulai, Iskandar, Malaysia. This project targets the high-technology, advanced manufacturing and logistics sector aligned with Malaysia's ongoing industrial transformation and supply chain realignment. Collectively, these initiatives strengthen our development pipeline, expand our industrial ecosystem, and reinforce our long-term growth trajectory. 2025 has also been a transformative year for the growth of our recurring income base. In February 2025, we closed a landmark deal to build and lease the shell and core of data center facilities to Pearl Computing, which is expected to generate approximately 4.8 billion in rental income over the initial 20-year term. Construction is progressing on schedule, with completion targeted in the second half of the financial year 2027. Upon completion, this asset will contribute stable, long-term rental income to anchor future earnings visibility and cash flow resilience. Over the next 3 to 5 years, we aspire for 20 to 30% of our earnings to be anchored by recurring income. Beyond data centers, our placemaking strategy will further expand and diversify our income streams. At BBCC, assets such as Tua 1895 and the Labs have achieved strong occupancy, with several exciting new-to-market tenants elevating the development into a vibrant dining, entertainment and lifestyle destination at the heart of Kuala Lumpur. Across our townships, our other lab series, namely Majestic Labs, Spring Labs, Grandeur Labs and Arden Labs, together with Century Mall, have become community hubs, drawing increasing footfall and boosting the overall value of our developments. EcoWorld is evolving at speed, powered by digitalization and an agile workforce. Our investments in technology are enabling smarter, faster operations, while our team's resourcefulness and adaptability allow us to move quickly from opportunity to execution. This approach strengthens our ability to innovate, create value, and deliver sustainable growth, ensuring that we remain ahead in a rapidly transforming market. 2025 has been a truly remarkable year for EcoWorld. We have seen strong growth across all key metrics, from sales and profitability to healthy cash flows, enabling us to pay our highest dividend to date to our shareholders. Moving ahead, we remain confident of the underlying demand for our projects and products. At the same time, we are mindful that uncertainties lie ahead due to the ongoing Middle East crisis, evolving trade dynamics, and other global headwinds. As such, we will remain prudent on future investments, continue implementing cost savings, and drive digitalizations to realize efficiency gains across our operations. Beyond numbers, our focus has always been on building a resilient and sustainable business. By diversifying our portfolio, maintaining disciplined capital management, and growing our recurring income, we are ensuring that EcoWorld is built to last. Thank you for your continued trust and for walking this journey with us. We look forward to another year of growth, innovation, and shared success ahead.